Hello viewers, welcome again to Already Late. RBI Governor Mr. Shaktikanta had a press conference this morning and he shared some insights on the economy and announced a few measures to boost the economy. There were a few technical terms in the press conference and thus the need of this video. This video explains the measures taken by RBI and what each measure would mean to you and to the economy. Watch till the end to know how this press conference will impact you and your finances. Let me start with his opening statement. Since March 27, 2020, when I spoke to you last, the macroeconomic and financial landscape has deteriorated, but light still shines through bravely in some areas. There is a mix of concern and positivity in this statement, but I feel there is more concern than positivity. The reason for concern were spelled out by him as well. The first reason was IMF, International Monetary Fund, has projected that the global economy is expected to plunge into the worst recession since the Great Depression and far worse than the global financial crisis of 2008. The IMF has named it the Great Lockdown, estimating the cumulative loss to the global GDP at around $9 trillion, greater than the economies of Japan and Germany, the third and the fourth largest economies of the world combined. Now that's the impact. Further, as expected, exports reduced, but the reduction was by 34.6% in March. This was much more severe than what happened during the global financial crisis. The shining line though is that IMF has projected V-shaped recoveries close to 9% for the global GDP and 7.4% for India in the next year. Of course, this year the projection is 1.9%. Now let us look at the measures taken by RBI. The first measure was announcement of TLTRO, Targeted Long-Term Refinancing Operations, to the tune of 50,000 crore rupees. First, let us understand what is this LTRO. LTRO is a measure in which RBI is lending money to banks for a period of 3 years at the repo rate, which currently is 4.4%. And this money is given against government securities. This money has to be used by the banks to purchase investment grade securities from NBFCs. A minimum of 50% of this money has to be used by the bank to purchase securities from small and mid-sized NBFCs. In the last 3 weeks, 1 lakh crore has already been given out by RBI as LTRO. Now the question is, what will happen due to this? NBFCs will get more money at this very crucial juncture. Many NBFCs have been struggling for money even before the corona pandemic broke out. And now with the moratorium offered, money availability with NBFC is a serious concern. The next measure was announcing rupees 25,000 crores to NABARD for refinancing regional rural banks, cooperative banks and microfinance institutions. Also 15,000 crores to SIDBI for on-lending refinancing and 10,000 crores to NHB for supporting housing finance companies. Now why is this important? These three institutions usually raise money from the capital market for their businesses, but due to the pandemic, fund availability is already an issue. This money is also being given at a repo rate of 4.4%, which makes it feasible for these three agencies to make funds available and keep the industries and the institutions depending on these three running without major challenges. The next measure was reducing the reverse repo rate from 4% to 3.75%. Now, as you know, reverse repo is the rate at which a bank earns, the rate which the bank earns when they keep money with the RBI. What does this mean? Even in the last announcement by RBI, it had reduced this rate. Reducing it further means it is now even more unattractive for the banks to park their money with RBI and instead look at other avenues for lending. This will make lending more attractive and we can expect lending to pick up once the impact of corona gets clearer and once the lockdown has completed. The RBI governor also indicated that inflation is on a reducing trend and well below the targeted 4% for the second half of this year. He also said that there was an opportunity to be used here. Now, what is this opportunity? This opportunity could be that you see more rate cuts in the near future if inflation continues its current downward trend. Now, the question is this the magic pill that the economy needed? If stock market performance was an indicator, we should believe so. Why? The stock markets gave a big thumbs up to these announcements, with the markets ending at over 3% gains. But we need to tread with caution here. What RBI has done is made money available to the banks and to the financial institutions to lend. This is definitely a positive sign for banks and financial institutions. But the larger question is, where are the borrowers in this current uncertain situation? If there is no demand, all these measures would mean very little. The demand for loans from industries was already low before the pandemic broke out. And with the impact of virus, both in terms of the number of people getting affected and more importantly, the time it will take for industries to come back to normal level of business is very, very uncertain. The robust consumption story fueled by people like you and me has also taken a pause at the moment. The impact of this pause can be gauged soon with e-commerce companies, the one which we love. They are being allowed to resume operations starting tomorrow. If the great Indian consumer continues to shop and opt for EMIs, that could be a big savior for the moment for the Indian economy. If I were to sum it up to you, the benefit to individuals and small businesses can be in 2 points. Easy availability of loan as and when you need it. That's pretty much on the cards. And the second thing is lower EMIs on your existing loans in the near future. Do like my video if you like my analysis, if you think it was simple. Do comment with your feedback or any question that you have. Do subscribe to my channel if you still haven't, and do share with those who might find this analysis very helpful. Thank you. Happy learning.